and CEO of In the Money Stocks. Well, Nick, you've done it again. Thanks for coming on the show. How are you?
Very good, Michael. Thank you for having me once again.
Oh, my pleasure. All right, you want to start off with the copper market, JC, right?
Yeah, I wanted to start off with the copper today. It's selling off pretty sharply. If you look at the JJC, down over $1 today, and ultimately should go lower. So that's something I've been pretty much preaching on your program for quite a while, and you're seeing it play out again onto the downside. And this is not over. This has further downside to go.
Okay. First off, let's give everybody just a little handle on quite a while. You have been preaching short copper. What was it? I think it was somewhere about August or so last year.
I would think so. August 2011. Yeah.
Yeah. So in essence, what you have done is actually called the top in the copper market and then ridden it all the way down. And ladies and gentlemen, if I may, this guy was so good that he missed the exact top by 1/100th of a penny. That's pretty good shooting there.
I got lucky there.
Yeah. Okay. All right. How much lower do you think we're going to go?
Well, on Monday, I had sent out a note. We got short Monday on the S&P 500, and ultimately, as long as the S&P goes down, copper is going lower. So, this JJC is probably headed down to around, believe it or not, the $36, $37 level. So it's still got a lot more downside here.
Okay. All right. 36, 37. Do you think that we're looking at a global economic implosion based on these? Because this is base metals. This is the manufacturing side of the world. Yeah,
I mean, the great Jesse Livermore used to say, always follow the copper market. And to me, copper has always been a good leading indicator. I honestly think that, my forecast is for lower in 2012, and I've been pretty adamant about that. As you know, on your show, I said, the markets have a chance to bounce the first quarter, but it's a sucker's rally. And, now copper is trading lower. So this doesn't end. This goes on for a little while longer and, for at least into the fall season.
Okay. All right. So no sudden jerk, one last rally, a bear market rally coming up in the near term, or are you thinking no?
Oh, we got the 4th of July holiday approaching, so there's always a little bit of a bounce around 4th of July. I think traders should be aware of that. Just typical holiday season, volume gets light. But these problems in Europe are real. These problems in China are real. And, eventually they're going to just figure out that they can't keep bailing things out with debt. More debt just creates more debt. We'll see how it all shakes out and plays out. Ultimately, the Fed's going to have to come in with a QE, but that'll be later this year, and that'll give a nice inflation rally to everybody.
Okay. Now, I got an email from Brian. Said you've been short the S&P market for the last 2 days. Is that right?
That's correct. We went short the S&P 500 when the S&P hit 1363. So basically, we pretty much nailed the top, and we're sitting in all our shorts today. We've taken a little bit of profit off the table, and we're riding it down.
Yeah, well, for those of you who haven't been paying everybody pays attention on the show, but 1363.50 was the high in the futures market. Nice shooting. Okay, I've got a 25th cycle day coming up. What do you think we could blow through that, or that may be a short-term bounce there?
No, I think we're probably down to the end of the month. I said that even the last week I was on your show. That's a very important date. I understand its significance, but I'm ultimately under the impression we're probably going to head down until the end of the month of June, and then we'll look for maybe a little bounce around 4th of July. The only thing that has me concerned now with my short trade, and that's why I told everybody to move the stop loss into the money, is simply because Goldman Sachs put out a sell signal today. I don't know if you saw that. But I never want to be on the same side of the tape with those guys. So that's my only concern. Other than that, I'd feel very confident about this market going down until the end of the month.
Okay, so antennas up, could get a little bounce just to
you never, these guys come out and say that. I mean, who knows what's really behind it? Maybe they're trying to make a correct call for once. But, either way you slice it or dice it, I never like to be on the same tape with those guys. Okay.
All right. Any price targets before we go to gold?
On the S&P?
Yeah, downside.
124.
Okay. All right.
On the spiders.
Okay, got it. I got it. All right, gold. GLD or gold physical? Which one do you want to talk about?
Okay, we'll talk about the GLD since everybody, can relate to that, and it's so popular. But last week when I was on your show, I said, I don't see gold getting above 160. I know a lot of people were talking about the low in gold. Gold is not scheduled on my cycle to bottom until to put in a significant bottom until the fall season. So, don't traders out there looking at gold right now should still realize this has further to go on the downside. It could chop around a little bit. That would be great. I'm a guy that owns bullion, both gold and silver bullion, and I've owned it for years. So, but the reality is the reality, and that's the dollar. Dollar is getting stronger, and gold and silver will go down accordingly, along with copper and other base metals as well.
So, all right, let's get a target on that before we go back to the dollar, because I'm really interested in that. Go ahead.
Well, one thing I'm looking at right now is gold going back and retesting, GLD, I should say, retesting the 148. But if that level cracks, 130 is in the cards, to be honest. We can't rule it out with maybe a little pit stop support at 140. But it all really depends on the dollar. If the dollar gets, stays strong, and I think it will throughout most of 2012, I mean, we could be looking at lower gold. But it's going to lead to a great buying opportunity later this year.
Okay. When you say great buying opportunity later this year, give the audience an idea what we're talking about, because silver's down $1.50 today, gold's down, 47-ish. You've got to get a number that you're thinking you might be picking this up at.
Well, I think realistically we could pick up GLD around 130, maybe 125. SLV, if you're looking, I'm just giving the SLV since everybody has that. I would think $20. Somewhere around there. I think that's a fair assessment.
Late in the year or sometime before that?
No, it'll be before the end of the year. At least that's what my cycle. But I have a little bit of about a 30-day window in there. So, but it'll be later this year. Right now, I mean, there's no need to get in front of this.
So right now, you think the deflationary trade is on and in good health?
Absolutely. I definitely think the deflationary trade is on. We should head lower, and I've been, proclaiming, trying to tell people, warn people, but if you came into the trading room, you'll see exactly everything that we're doing. But yeah, I think the deflationary fears are here, and it's real.
Well, you darn sure would have been short the last 2 days on the stock market move.
That's right.
At the very least. All right, GDX. Did you want to talk about that?
Yeah, I wanted to talk about GDX a little bit because a lot of people think the miners are a safe haven, and they're not. The gold miners, that's the gold vector, market vectors, gold miners ETF, the GDX, selling off pretty sharply again today. This could easily go back down and retest that $40 level, and after that, it could test 37, 36. But anything right now, anything in the metal area, it doesn't matter if it's a precious metal or a base metal or an industrial metal, it's going to suffer due to the stronger dollar, and that should continue. Okay,
now let's go to the U.S. dollar. There's been a lot of speculation, me too, wondering if we're going to have a double top here at the June 1st highs, back there at 84 on the U.S. dollar.
We could, pause there, but ultimately, I think that, the dollar's headed higher. Ultimately, the dollar's headed higher. On the daily chart, you'll get up to that 84 level, but, if it cracks through there, I mean, you got 85, then 89, and then really like 91, 92. So, and then there's some big patterns out there, Michael, on the dollar as well that traders got to watch for that put you almost to $100. So these should all come to fruition in 2012, if I'm correct.
So our original theory that we would have so much bad news and bad economic data out of Europe and Asia that there's really no stopping the tidal wave of funds seeking a safer haven in the U.S. dollar.
No, I mean, where else are you going to put your money? You got to either put it in three places. One, the dollar, one is gold, and one is silver. Silver and gold are going to be second-class citizens when it comes to the dollar right now because people would rather stay in paper, and you need the dollar to buy goods. So I don't see anything stopping the dollar right now.
Okay, well put. All right, before you go, give everybody a way to reach you so they can get into the trading room and at least watch you pull these phenomenal trades off.
Yeah, come on over to InTheMoneyStocks.com. This Saturday, Michael, we are hosting a webinar, In the Money Stocks Methodology webinar. We are almost sold out, and I'm not kidding. So I know people saying, he's probably just saying that, but honestly, we're almost sold out here. We're only going to take a a handful of members or of new subscribers. So once again, we have that coming up, and just come over to In the Money Stocks, take a 7-day free trial to our research center. You'll get all of our nightly setups, or come over to our intraday stock chat. You can watch our computer screens and see everything we're doing on an intraday basis.
Great. Thanks so much, Nick. We'll talk to you later.
Thank you, Michael. Have a great day.
Mine too. All right. Everybody, that was Nick Santiago, President and CEO of InTheMoneyStocks.com. Go there and watch this guy trade. It'll blow your mind. Coming up next,